Welcome back to Market Fatafat on ET Now, and moving on to an ET Now exclusive where sources tell your channel that the government is likely to rationalize the taxation structure on compressed biogas and has asked the Finance Ministry to address the double taxation issue. Let's get in more details on this one, and Prakash Priyadarshi is joining us with that. Take it away, Prakash.
Yes, an important development coming in as we are learning from our sources that the government is likely to rationalize the taxation structure on CBG, that is compressed biogas. Sources are informing that the Cabinet Secretary-led committee has asked the Ministry of Finance to rationalize taxation structure on CBG. Along with that, we are also given to understand that the Committee of Secretary has discussed this issue last month, which was represented by secretaries from the Ministry of Finance, Ministry of Petroleum, Ministry of New and Renewable Energy, Ministry of Jal Shakti, and Ministry of Fertilizer. It is important to note that a 14% central excise duty is being levied on compressed biogas in addition to the 5% GST in some cases. The government is collecting a 14% central excise duty on CBG when blended with CNG. We should not ignore the fact that the government is already charging 5% GST on CBG. Which is a clear case of double taxation. Therefore, the Committee of Secretary, on recommendation of the Oil Ministry, has asked the Ministry of Finance to address the issue of double taxation. It is expected that the Finance Ministry may cease to levy a central excise duty on CBG going forward. A very significant development coming in. This waiver may provide significant relief to the CBG producers and city gas distribution companies. It will also help government to achieve its target of 5% CBG blending in CNG within the next 3 years.
And well, moving on and resuming with all the counters that are buzzing in trade, we are now joined by Chandan, Taparia, derivatives and technical analyst Motilal Oswal on the technicals, and Ria is joining us again on the research side. But coming to you, Chandan, you picked up Dixon Tech for us, and this is a counter that just keeps on giving. I mean, look at the stellar gains that we have seen on this counter, whether it is year to date, 120% return, or the last 6 months, or even 1 month, you know, the 12% upside that this has given. Is there more steam left in the counter? How does one play this counter? Chandan, could you please unmute yourself?
Yes, good afternoon. Thanks for having me. So we have seen a decent recovery in most of the IT name from lower levels, and Dixon is one of the strongest name in the entire setup. The stock has completed its profit booking decline of last 4 days and seen a strong bullish candle, and I believe a small follow-up can lead the stock to higher zone, so one can continue to hold the long position in the counter. As of now, support is near 13,800 zone. Until it holds about the same, the ongoing momentum can extend to us 14,750 to 15,000. So stock has potential to rally by further 5 to 7%. However, in the entire year, it has rallied by more than 100%. But as per the data setup, still there is a scope of further 5 to 10% momentum on the upside in the counter.
All right, that's about this.
Moving on, then Chandan, there is NHPC that's also in focus today, and it is on the back of the fact that they have signed an MOU with the government of Rajasthan on for the development of pumped storage projects and renewable energy and battery energy storage systems in the state of Rajasthan, with a proposed investment of 50,000 crore odd rupees. And on the back of that, in fact, they have also revised the scheduled date for commissioning of 300 megawatts solar PV project in Bikaner, Rajasthan, that will be effective from 31st of March 2025. On the back of this news flow, NHPC is in focus today.
All right, that's about NHPC, why the stock isn't buzzing. But from the auto pack, let's also shift gears to Tata Motors then, because this counter is in focus on the back of a note today which has come from Morgan Stanley, where they are saying that there has been profit warnings from a lot of these major global OEM players, and the latest one being Volkswagen. And Tata Motors too on the JLR front has guided for a weak Q2 on the back of the supply chains, because one has to see in the perspective that is not just Volkswagen that has come out with a warning. They have cut down some of their EV plans as well. But a while back, there was Mercedes, which has adjusted their sales guidance for this particular year. Other than that, Volvo Cars earlier this month has also scaled back its margin and revenue targets. And even BMW recently has cut its EBIT margin guidance for 2024. That was between 6 to 7% now versus the earlier range of 8 to 10%. So what you will see that all these global players in the OEM side have been cutting down their guidance, foreseeing that there could be some pressures ahead. And one such major player in the Indian markets is Tata Motors, which drive major of its revenues from the JLR division. And on the back of that, Morgan Stanley does feel that one cannot take their eyes off from Tata Motors, and that's why the stock is in focus.
All right, moving on then, M&M is the name that you picked out for us, Chandan. Now, M&M, this one from the auto pack has done pretty well for itself. In fact, in the last 1 month also, it has picked up, 14-odd%. Tell us, what are you seeing in the charts for this one? Where is the upside here?
Yes, so M&M has seen a decent price action in last 3 weeks. Earlier, it remained consolidative, but the recent breakout with positive price pattern, which is called by pole and flag, clearly indicates that bullish momentum could continue. We have seen the formation of high top, high bottom, and the Nifty Auto can do well. And we are heading towards festivity, and I believe M&M could taste the flavor. So one can buy with support of 3,020, and M&M can head towards 3,400 to 3,450.
All right, that's about M&M. But we also spoke with the management of M&M, where they say that the SUV vertical has already grown 20 to 24% and has outperformed the peers. And those are the words coming in from Vijay Nakra, who's the president at automotive sector for M&M. So let's go across and listen in what else he had to say about the vertical and their estimates for the booking for the latest launch of Thar ROXX.
Had a growth in the SUV vertical by 24%, and overall the performance has been good. We've done overall 88,000 numbers for the auto business. So the month has been great. Demand continues to be strong. The performance has been strong across all brands. Whether you look at 3XO, 700, Scorpio as a portfolio, Thar as an overall portfolio, not just Thar ROXX. A little early to say, but given that it is a lifestyle product, given that the larger part of the SUV market is in sort of the 4x2 segment, we believe the maximum demand would probably be on the high-end versions of our 4x2 variants. But like I said, a little early, let's wait for the bookings to come in. And given that Thar's DNA is 4x4, we wouldn't be surprised if we also get a decent amount of bookings on the 4x4 versions of the Thar ROXX.
All right, moving on. Ria, you picked out Ipca Labs for us. Tell us, what are you seeing? What's the news flow on this counter?
Well, Ipca Labs is in focus today since the board has approved the sale of all rights, titles and interests in the product approvals and all the goodwill associated with the 9 ANDAs that are currently owned by Bayshore Pharmaceuticals LLC USA for $2.65 million through an asset sale agreement to Unichem India. And the board has also approved the sale of all other generic formulations, marketing and distribution business of Bayshore in the US market through a business sale agreement for $10 million to Unichem USA. So which is why we're keeping an eye out on Ipca Labs and Unichem today.
All right, that's about some of these pharma names, but let's also talk about the next stock that you're tracking, Chandan, and that is PNB, because what we are seeing is that this is market sell-off. All these PSB counters rather, not participating much, and for PNB as well, there has been an intraday recovery. Talk to us, Chandan, how are you spotting this on the charts?
Of the counter is negative, and as per the relative rotation graph, PSU Bank is one sector which is likely to be in the lagging quadrant, where strength and momentum both are missing. And as per the price setup, the stock has been making lower top, lower bottom. It opened down, however, witnessed some recovery, but I believe that every bounce could be sold as of now. So with the structure of the bearishness, I believe bounce could be sold. So now till it remains below 109, any small bounce could be sold for the downside. Target was 98 to 97 marks.
All right, with that, it's time for us to slip into a short break. Viewers, don't go anywhere. We are back with more stocks. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. So let's resume. Ria, coming to you. IREDA is the name that you have picked out for us. Operational updates coming in for this counter. Tell us what are the updates for this?
So IREDA has come out with their Q2 operational updates. Now the loan sanctioned have come in at rupees 17,860 crores, up more than over 300% over the previous year. The loan disbursements as well have come in at rupees 9,787 crores, up over 56% compared to Q2 of last year. The outstanding loan book as well has gone up over 36% on a year-on-year basis, coming in at rupees 64,500 crores. And the company has also recently announced a fundraise of rupees 4,500 crores through an institutional share sale. But despite all of this positive news flow, the stock is seeing some selling pressures, trading with cuts of 1% right now.
All right, that's about IREDA, and on the back of the business update, the stock is in focus. But moving on, Chandan, take us through what's happening with Info Edge and how are you tracking the movement here?
So yes, talking about Info Edge, Naukri, the stock is holding well. I've noticed sustained buying interest in the counter from last almost 30 weeks and it has been making high tops, high bottom. So I believe in this market scenario, it's better to be with the safety. The stock has been holding well, and even if I look at the bigger time frame, sustained move is clearly visible. So I believe that momentum could continue. As of now, the immediate support for the counter is near 8,020, and with this support, Naukri or Info Edge can head towards 8650 to 8700 zone.
All right, moving on then to another counter that is in focus. Through Projects is in focus today because they have been awarded the new orders worth 1,241 crore rupees in the T&D business in India and the overseas market. Again, the stock has given up those morning gains. It is currently trading absolutely flat with cuts of 0.4%. But on the back of this order win, this stock was up almost 1% in trade today.
All right, that's about this particular stock. But moving on, let's also talk about another stock that is in focus, and that is Aadhar Housing, because today investing has come out with a note where they have initiated a buy on this one with a target price of 600 rupees. They're saying that this is the largest and the most diversified housing finance company in India. This has a dual underwriting model. Diversified organization mix extends the total addressable market for this particular company, and the supply overhang may remain as a private equity has 76.5% stake. The AUM growth expectation between FY24 and 27 stands at 21%, while the profit can show a growth of 20% in the same period, and that's the expectation coming in from Investec. But not much excitement on the stock price as well, because if you will see, the stock has already shown a good run up in the last couple of weeks. But on the back of this news report, the stock is indeed in focus.
All right, that's Aadhar Housing Finance. But moving on to Coforge, Chandan, the stock is hovering around its 52-week high. Tell us, is there more steam? What is the upside for this counter?
Yeah, we have positive on the selective auto and IT name, and I believe that these IT name could do well. Especially talking about Coforge, we have seen better rollover in the counter from previous series to current series, and Nifty IT is finding stability. The stock is given a breakout from the consolidative band of last 12 trading session. Earlier it was finding hurdle at 7100 zone, and today it is all set to close above 7100 marks. So I believe a small follow-up could lead the counter to even open higher and extend the momentum for next 1 or 2 days. So one can buy Coforge with support of 6980. Here we have a target towards 7400 zone.
All right, that's about Coforge, why this stock is in focus today. But moving on then, let's also talk about IOC, because for today, the company has announced a price hike for their LNG, and this particular stock is in focus because apart from that, IOC shares have also withdrawn that 22,000 crores right issue as well. So on one side, there has been a price hike that the company has taken, but on the flip side, the stock price that is seen to be under pressure is because there has been a withdrawal of 22,000 crores of right issue because the government will not participate due to the lack of allocated funds for the ONCs in 2024 and 25. So on the back of this news flow, IOC is in focus today.
All right, Chandan, moving to you, Dr. Lal Patlabs is the name that you picked out for us. A good gain in the last 6 months, but in the last 1 month, we're seeing a bit of a consolidation coming in on this counter. Tell us, do you see a breakout happening in this counter?
Yes, the stock has seen the short covering as open interest declined by around 8 to 10% in the last 2-3 days. And after the consolidative move of almost 35 days, it has taken support at its 50-day exponential moving average, which known as a positive setup in the counter. 2 days back, it bottomed near 3250 marks with formation of bullish belt hold, which is one more value addition for bullish strength in the counter. So I believe as per the price structure, this stock should start the next leg of rally after the recent consolidative move. So one can buy with support of 33.10. We are expecting a run up towards 35.30 in the counter like Lal Patlabs.
Alright, that's about Lal Patlabs. What a move in today's trading session. But then another stock that you are tracking, Chandan, is Aurobindo Pharma. And take us through how you're looking at this stock on the charts.
So selective pharma and PSU name are witnessing sustained selling pressure, and Oro Pharma is one counter where we are expecting some weakness. On the monthly chart, it formed a bearish belt hold kind of pattern, and formation of dark cloud cover on the monthly chart also indicates some sort of profit booking could be there after a stellar rally of 21 months. Looking at the daily and the weekly chart, it has been making lower top, lower bottom formation, and it has broken a key 50-day exponential moving average. So with all these price development, some weakness could be there in the counter. So one can sell with a stop loss of 1458, and the stock can drip down towards 1385 marks.
Right, with that we have come to an end of all the stocks that were buzzing away in trade. Chandan and Ria, thank you so much for taking the time out and joining us on Market Fatafat. But let's move on to an exclusive then from the North Block. We learned from our sources that the centre is in fact asking state governments to implement recommendations made by the Empowered Committee with respect to the stalled housing projects. Let's go across to my colleague Prakash and get more details on that.
Yes, our sources are informing that the Housing and Urban Affairs Ministry has asked the state governments to implement the recommendations of the Empowered Committee's report on the stalled housing projects. We're given to understand that the centre has asked the state governments to initiate the process to implement the recommendations of the Empowered Committee's report. In fact, sources are informing that the resolution of the stalled housing projects is on top of the government agenda, and therefore state governments have been urged to initiate the process. In fact, some of the state governments have already initiated the process. They have implemented some of the recommendations, but they are finding it difficult to implement certain provisions, and therefore this issue will be discussed with the Ministry of Finance. Our sources are informing the Ministry of Housing and Urban Affairs will approach Ministry of Finance on this issue very soon. Along with that, recommendations related to fresh loans for home buyers stuck in stalled housing projects will be discussed. In addition to that, the committee has also recommended bringing stalled housing project under priority financing. That is something which is going to be part of the discussion. Also, policies related to minimum internal rate of return may also be reviewed.
Well, thank you so much, Prakash, for getting us all those exclusive details. But moving on then, we also spoke with Manpreet Gill of Standard Chartered Bank, who shares the outlook on China's mega stimulus. So let's hear out from what Manpreet Gill's view on the same and the kind of rally that we are seeing in select commodities. But along with that, we also had a word with Adrian Womat of Emerging Markets Equity Strategist. So let's go across and listen into both of them.
As an economist, I'd say, look, these are absolutely, I think, very significant measures. And I think more than the PBOC measures themselves, it's the expectations that have been set in motion that there may be more to come on the monetary policy side. But more importantly, I think what I'd be excited about is the signaling from the Politburo that there's more, reviving growth and sort of really providing more support to the economy is becoming more of a fiscal priority. Because one additional factor I'd add is on oil prices, because while metals might be the positive, we do see improved sentiment in Chinese demand that could potentially start to tilt the balance a little bit in favor of slightly higher oil prices.
The Indian bull market has been very much driven by local investors, but specifically looking at the FII fund flow impact here, I think there are two stages to this. At the moment, if you're running EM money and you've been outperforming, you've been very overweight India and underweight China, all that alpha has disappeared in the last week. MSCI China total return is up about 30% year to date. India's up a very respectable 26%. I would see this as more of a relief rally in the commodities space rather than that's something that's going to be sustained. It may have more of an impact on precious metals, but I think for the underlying, fundamental base metals that are going into manufacturing activity, its impact is going to be relatively modest.
Well, moving on to the word coming in from Feroz Aziz, who's the Deputy CEO of Anand Rathi Wealth, who believes that institutions have an unfair advantage over retail investors in the F&O segment, and therefore retail investors should stay away from it. Let's go across and listen to his take.
See, derivatives are instruments which require you to understand something called Greeks. Okay, what are Greeks? If you Google, you will know. But most of the people who dabble in derivatives don't even know Greeks. Greeks are alpha, delta, gamma, vega, theta, rho. These are 5 Greeks. Somebody has put his lifetime earnings and he doesn't even know the definition of Greeks. Yeah. Then there is something called second order Greeks, which is called vera and veta. These are 2. So these 7 things a person doesn't even know and he's dabbling his hard-earned money. The other person who's an institutional investor, the person who lost 1.8 lakh crores, there must be somebody who has made that 1.8 lakh crore. That is an institution who has done a 3-year course on this, right? And created algorithms and AI to make sure that you have an unfair advantage on the rest of them. That's what they're trying to curb. And I personally think that regulator can't just see this as a parent and keep quiet, saying that this is happening, because you have the information that who's winning and who's losing and why are they losing.
All right, with that, it's a wrap on this edition of Market Fatafat. Shrishti and I will take your leave, but viewers, don't go anywhere because closing trades is coming up next.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.